Hello everybody, welcome to the extreme, aggressive, moderate, Vita Loca, and mean reversion signal tutorial. So starting off, let's talk about the extreme signals. The extreme signal is 100% momentum algorithm. That means no one controls it. It's 100% an algorithm. So the best way to trade the extreme signal is to do it manually, which means actually clicking the button, enter, and exit. We do not recommend using the bot or the trader assistant for the extreme. Why? Because it requires a little bit more thinking and analysis than all of the other signals. Since it is 100% an algorithm, it has no thinking, it has no emotions, and it doesn't know everything that's going on in the market. As soon as the setup is reached, it's going to give you a signal. So if you see that the market has been going down for the last 30 minutes, and then suddenly you have a small pullback and the extreme gives you a buy signal, you would not enter in that buy. But if you were using it on a bot, the bot would automatically enter it and stop you out. So you should always keep your eyes on the VIX and the yields. Always make sure to see that they're both going in the same direction. VIX up and yields up mean market down. VIX down and yields down means market up. Also, pay attention to the DDF. It's going to tell you what the current momentum of the market actually is. And since this is a 100% momentum algorithm, it's going to tell you what the momentum of the market is. That's why we use the DDF. Next up is the aggressive signals. These are filtered signals, and they're a lot better. You can actually use these on the bot or the trader assistant. The reason I say they're a lot better is because I trade with prop firms. And especially if you trade with prop firms, it is a lot better than the extreme. And why is that? Because it considers the trailing drawdown. The aggressive signal was purposely made for the prop firm system. It has the trailing drawdown, so you actually don't lose more money than you gain. And what I mean by that is that if you are working on an actual prop firm, and let's say you make $100, but during that trade, you went up to 150 and then came back down all the way to 100, and then you closed out, your drawdown is now based off of that 150, not the 100. So that's why the aggressive has a trailing drawdown and it's made for prop firms. It's going to protect and give you the best possible exit so you don't miss on that drawdown and potentially break your account. Next up is the moderate signals. The moderate signal is exactly the same as the aggressive, except it holds longer. And what I mean by that is that it doesn't protect so soon. Again, since it's the same as the aggressive, you could also use this on a bot or a trader assistant. The moderate will only ever exit when it reaches a target level, a bounce level, also known as a reversion level, or when a new flux of the opposite order type comes in. So when you use a moderate signal, you're going to be in a trade for a lot longer than an aggressive signal. Next up is the Vita Loca signals. The Vita Loca signals are our own proprietary setup that Quantico Cap actually created. There's going to be a lot of trades a lot of the time, which means more good trades, but also more bad trades, since inevitably there will be more trades in general. However, the Vita Loca is always fast to protect. It's basically a quick scalping setup that allows you to make a lot of money. However, since it is always fast to protect, you will have a lot of break evens and a lot of times coming out with just a little bit of profit. In some days, the Vita Loca might have a lot of stops. However, when it catches a really good trade and the trade keeps going, it's not going to exit on a trailing drawdown. It's only ever going to exit on that break even. We do recommend to use it with a bot or the trader assistant, but more likely the bot since it's very fast to enter and exit trades using the smallest contract size possible. And next up, the mean reversion signal. This is a very simple signal to understand. It's going to take all potential reversions on any major level according to the market information. Again, using the DDF and its own special setup. Any major level means gamma levels, hedge walls, VAHs, VALs, OTMs, ATMs, VWAPs, POCs, and any major level. And lastly, here are some important notes. Every single strategy is different. There is something different about each strategy. Every single strategy will have good days and it will have bad days. That's just inevitable and that's just trading. What you should do is pick one and stick with it. So if you pick aggressive, stick with aggressive. Don't just keep changing, because what happens is eventually you're going to change and you're going to lose money, and then you're going to change again and then you're going to lose money. Who's to say that every single time you change, that strategy won't have a bad day? So in the long run, every single strategy makes money. All you have to do is stick with it. Thank you so much for watching. I hope this helped.